makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So Marine Le Pen's national rally scored victory in the first round of France's legislative election with a smaller margin than some polls had indicated. While President Emmanuel Macron and the leftist New Popular Front maneuver to keep the far right from power, Le Pen will now chase a majority in the second round vote.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power. We warmly thank the voters and welcome this result. This first step towards choosing an alternative is a mark of confidence which honors and obliges us.
En toutes circonstances.
Our instructions are simple, direct, and clear. Not one more vote, not one more seat for the national rally.
Well, let's get more now from Bloomberg's Paris bureau chief, Alan Katz. Alan, good morning. It's been quite a weekend. Markets reacting positively. Is this because Le Pen is unlikely to win a majority?
Well, it's partly that, Francine. The other part might be that they're a little bit relieved that the left didn't do better than it did. There was a little bit of concern before the election that the France's left, and it was sort of a group of sort of moderate left to far left parties, could have done better than expected, and that might have sort of thrown up into the air how France was going to reduce its deficit and what kind of spending patterns it might have in the future. And that was pushed aside by yesterday's result. The other issue is that, in fact, a good base case is that it will be a hung parliament, that the national rally won't be able to get a majority. And so at the end of the day, sort of things will continue as is. And for markets and business, that's pretty positive because France has been a pretty business-friendly place under Macron.
So, Alan, what exactly are the polls saying about Sunday's vote? And we're seeing now tactical voting, right? Certain basically parties saying if I'm third in this constituency, then you should vote for someone else.
Yeah, so there's most of the parties, but not all, that are not aligned with the national rally have said, like, yes, if my candidate is, say, in third place in a runoff, so runoffs can be with either 2 people or 3 people. It's a relatively complicated system in France, and occasionally even 4 people. Anyway, saying if my candidate is in a lower position, they will withdraw. They won't actually file the paperwork by Tuesday evening to be in the next round in order to give the best chance for an opposition candidate to the national rally to win. But not everybody's doing that exactly the same way. You showed the clip of Mélenchon saying that everyone should vote against the national rally. If you look at Macron, his group, he and his group have said that as long as these parties share their democratic and Republican values, they would want to sort of form an alliance with them. But in the run-up to this, they've always demonized France Unbowed, which is sort of the left edge of that leftist alliance. And so it's not clear that they will cooperate if the candidate, say, who's in the number 2 position, is from that France Unbowed party. So there's still a lot of negotiation and a lot of sort of jockeying to go on between now and 6 p.m. tomorrow evening in Paris time to see sort of who ends up actually pulling out to try to support this sort of Republican front.
Alan, thanks so much. Alan Katz there, our Paris bureau chief. It's going to be a busy week for Alan and his team. Now let's get straight to George Lagarias, chief economist at Mazars Wealth Management, and Bloomberg's Justina Lisa. Thank you both for joining us. I like inaugurating the new desk with both of you. Justina, there's a lot of news. And actually, I wonder whether markets overreacted to a possible Le Pen party win and now are overreacting the other way. The CAC 40 is getting 2%.
Yeah, I think that's a bit hard to tell. I mean, anyhow, obviously, markets have moved quite a long way since kind of like prior to this shock decision to call an election. And I think this kind of reflects the fact that anyhow, markets are not going to get the status quo and they're not going to get the best outcome, right? Because whether it is the far right or kind of left-wing parties coming to power, I think the attention is kind of on kind of what's going to happen to fiscal policy and the implications of that for kind of the unity of the Eurozone.
And George, this is kind of what you argue as well, is that it's not really, so much of a shock of who could come next, is the fact that actually France is a high debt economy with weak economic performance, and at some point something will have to give.
Well, France's debt to GDP is at 110%, expected to be 115 by the end of the decade. And for me, the news was a couple of weeks ago when Marine Le Pen was forced towards more mainstream positions after the initial bad market reaction. So the question is not who gets elected, but will they go into the mainstream to avoid bad market reactions, or will they stick to their ideology?
But the problem is that we don't really know because we don't know who would be finance minister.
That is true, but at the end of the day, most governments, look at what happened in Italy. Most governments are afraid of bad market reactions because that might cost them power. You know, I'm from Greece. I saw this play out once and very intensely. And at some point, the government was forced into more mainstream positions because they risked outright bankruptcy. So, you know, with that high debt, markets get a say in how a country is run.
Just, you know, when you look at some of the market reaction, so there's, you know, one way of playing it is euro, the other one is through bonds. Where else are you expecting this kind of to go through as we get through a number of elections?
Yeah, it's kind of interesting because I guess like in the two other big elections this year, I mean, the UK is coming up, the US is coming up. I think the market reaction is a lot less obvious. And obviously in the case of the UK, I mean, everyone is already kind of expecting a Labour victory. And they have kind of like dialed back a lot of kind of their I mean, this is a pretty kind of centrist platform, so I think it is a bit less clear. And with the U.S., I mean, same thing. I very much remember in the last election, and markets ended up reacting in a completely opposite direction to what everyone predicted after Trump won. And so I think with the U.S., the question here is, are we going to see a bit more hedging, given how cheap option prices have been kind of going into the summer?
Yeah, it's a funny old market, actually, this week, because there's so much politics news, and we have, you know, Joe Biden and his allies trying to rally after that disastrous debate. So there's so much politics in the markets. There is a little bit of data later on in the week, but I guess they're having to make a decision on fiscal policy and the like.
Yeah, I think in the case of the U.S., there won't really be much of a reaction to a lot of the election news. But you're right in that we have jobs data coming up. And that's going to be really key in the sense that we actually have seen U.S. inflation data, especially PCE coming last week, coming down kind of just as the Fed wanted. So is the jobs data also going to be aligned with that trend? I think that's going to be the big question here.
So, George, in terms of data, we had, you know, it's incredible if you look at the 25 biggest central banks in the world. I think all of them, apart from one, will probably ease in the next 18 months. What does that mean for, you know, as chief economist, what are you looking at?
Well, they will ease, but it's a question whether they'll go into a rate cut cycle.
Yeah.
Okay, and the problem is that inflation is actually still persistent. You did see some good PCE data, core PCE data on Friday, but if you look at the services inflation, it's still persistent. Meanwhile, inflation out of China is actually picking up. If you look at the PMI numbers this morning, you see the fastest rising inflation, input inflation in manufacturing the last 2 years. So right now we enjoyed a good spot of disinflation because goods prices were falling. Okay, but that is coming to an end. So central banks know that. Yes, they might start easing rates, but whether they will go into rate cut cycles, this is the real question, and it's yet to be answered.
So are you expecting actually Fed cuts this year?
I do expect one rate cut this year. I'd be positively surprised if there are two, to be honest, but obviously no more than that.
And so do you think there's, as a chief economist, again, is there a bias against, because we've seen this in the past, right? The BOE starts cutting and then it's cutting almost at every meeting. And the governor actually was pushing back against that last time he came on Bloomberg. But do you see a bias towards, you know, thinking that that's what the Bank of England will do, that they'll continue cutting at every meeting, or is it more problematic for ECB?
The ECB and Bank of England, they'd love nothing more than to cut rates right now. Okay, the economy is not doing that well, and that would help stimulate the economy, but they have a Fed problem. If they start cutting very aggressively before the Fed, A, they risk importing inflation wherever they import US dollar goods, and second and more important, they risk capital flight. Look at what happened to China. China has seen massive capital flight, you know, when the interest rate differential grew too much. So they know that they might lose money from their banks, and that is why whatever they need, they might not get until the Fed moves.
I mean, again, this was one of the big concerns, is that, you know, can you go before the Fed? But we've heard a lot of central bankers push back against that and saying, at the end of the day, they're setting monetary policy for their own economy.
Yeah, I mean, that's what they say, but I think the currency consideration is definitely real here. And I think it's funny because I think the first rate cut was the easiest decision for the ECB. But kind of more recently, we've seen maybe inflation, even in the Eurozone, is not sort of as benign as a lot of people thought. And in this sense, this week's number, we're also going to get a set of CPI numbers out of the Eurozone, and they will be key. And in terms of what economists are expecting, they are expecting these sets of numbers to show disinflation, but we'll have to see if that really kind of comes to pass.
Thank you both for joining us. George Lagarias, chief economist at Mazars Wealth Management, and Bloomberg's Justina Lee. Now, coming up, we look ahead to the second round of France's legislative election as Le Pen chases a majority, with other parties plotting to keep her from power. This is Bloomberg. Well, French President Emmanuel Macron's centrist alliance and the left-wing New Popular Front are weighing whether to pull candidates from the second round of the legislative election on Sunday. Now, the two groupings are aiming to keep the ascendant far-right National Rally out of power. Now, let's get more from Bloomberg's Caroline Conan at the National Assembly in Paris. Over to you, Caroline.
That's going to be a very interesting second round, Francine, and I'm very happy to get more on this with Rim Momtaz. She is research fellow at IISS. Thank you so much for being with us this morning.
Thank you for having me.
Were you surprised by the first round result? What does that mean for the second round?
What was interesting about the first round result is the very high turnout, historic turnout, and also the fact that around 10 million French people ended up voting in favor of the far right and its allies. That is a turning point, an earthquake in French politics.
There's a lot of three-way contests, what we call the so-called triangles. Do you think that could actually change the outcome that we're going to see next Sunday?
A lot is going to depend on what Macron and his allies decide to do, whether they continue what seems to be now their tactic, which is to try to peel off from the far left, LFI, the socialists, the communists, the Greens, in order to form together a central big group. If that happens, it may help the far right, and it may not. They seem to make the calculus that it will prevent the far right from getting an absolute majority, but that seems to be quite a risky bet right now.
Is that also a risk for Emmanuel Macron's legacy after 7 years of being president of France?
So there's no doubt that given this historic result for the far right, after 7 years of Emmanuel Macron running the country, after 7 years of him promising in 2017 to eradicate all the reasons, I'm quoting him, all the reasons that the French may have to vote for the far right, he may end up like a U.S. President, Barack Obama, having been in power for 8 years, and then his legacy, part of his legacy being Donald Trump in power. Let's see what happens. Emmanuel Macron still has 3 years to go in his term, and the next year could be very tumultuous when it comes to politics and the parliament in France.
That's the Obama scenario. There's also another scenario that we've been talking about on Bloomberg TV, which would be Marine Le Pen actually forging close ties with Giorgia Meloni in Italy. Do you believe in that, or is Le Pen's party very different from Giorgia Meloni?
So Marine Le Pen and Giorgia Meloni do agree on a couple of things related to migration, for example, but where they have a real difference of opinion, and historic really difference in politics, is that Giorgia Meloni's party is part of the Italian far right that has historically been pro-NATO, pro-US, close to that position, whereas Marine Le Pen's party has historically been anti-NATO and anti-US, and on that, it may become a friction point when it comes to support for Ukraine moving forward.
Oh, so does that mean that the Ukrainian President Zelensky here is the one who's got the biggest thing to lose? Is he going to be the biggest loser in here?
Well, Ukraine certainly has a lot to worry about because unlike previous situations where the president in France and the prime minister weren't from the same government, cohabitation as we call it here, this time around Marine Le Pen has made it very clear that she and her government, if the far right does succeed in forming a government, they intend on defying Macron on foreign and defense policy, which in previous situations had been the remit of the president. And if that is the case, then they will certainly try to curtail French support for Ukraine. They've already said that they support Ukraine's fight for independence and sovereignty, but they will not be providing Scalp missiles, which are the long-range missiles that have been very strategic. They will not be providing fighter jets like the Mirage. They will not be sending in-country trainers. They won't support the renewal of EU sanctions against Russia. So there's a lot that could change if they do succeed in forming a government.
There's also obviously another scenario, which could also be an Italian example, the Mario Draghi technocratic government. Do you believe that there is a way for Emmanuel Macron to actually do that and just form some kind of moderate right, moderate left with technocratic figures and be able to implement some policies for the next 3 years?
Listen, that's certainly a possibility, but that would be a very big admission of the complete failure of his move in calling the snap elections. He said himself, Emmanuel Macron, that he called the snap election because there was a vote that wasn't represented, because the country was blocked. He couldn't govern even though he had a relative majority. If he ends up forming a technocratic government, it means that no new budget can be agreed, that nothing new can be done with the EU budget, that they can't come up and support common EU lending and funding for European defense. That will basically mean that Emmanuel Macron's foreign and European agenda will be DOA. And that will mean that he will be a lame duck president. So I think that he will try to avoid getting in that situation, and perhaps he will try to trap the far right, or so he thinks he will be doing, by letting them form a government and then leading the country into a political deadlock and a political crisis that might end with no confidence motion and perhaps new elections within 6 months.
So you think that if we get a national rally government, they will fail to get a budget in the fall, and then we'll have possibly new elections?
So that's a big question. We will see if they're able. It depends on the kind of majority that they end up getting. If they have the absolute majority, they will pass their own budget, and that budget will have real repercussions for EU budget, for EU Commission, and of course for the support to Ukraine.
Huge impact, of course, on the EU and the budget. Francine, with this, I give it back to you.
Thank you, Caroline Conan there, and Momtaz, International Institute for Strategic Studies Research Fellow. Much more to come, and this is Bloomberg. Now, UK opposition leader Keir Starmer has told Bloomberg that Labour's focus on growth means the party is not planning to raise taxes on banks. His party is projected to convincingly win this week's general election.
Nothing in our manifesto requires tax rises over and above the ones we've already set out in relation to non-DOMs, the private schools, VAT, private equity loopholes, and the extension of the tax in relation to oil and gas. So nothing else requires tax rises.
That's Labour leader Keir Starmer. Now, the Institute for Fiscal Studies says both his party and the ruling Conservatives have ducked hard choices on how to pay for their spending promises without raising taxes. In South Africa, the president, Cyril Ramaphosa, has announced his new cabinet allocating ministerial posts to opposition politicians while also retaining some close allies. Well, Enoch Gondongwana stays on as finance minister, signaling continuity in South Africa's economic policies. Now, the announcement came a month after the ANC lost its parliamentary majority and was forced to invite its rivals to join a coalition government. Now, in corporate news, BlackRock is buying private capital database provider Preqin for about $3.2 billion in cash. Now, BlackRock says it expects to close the deal before year-end. Preqin founder Mark O'Hare will join BlackRock as a vice chair after the deal closes. Now, Preqin competes with Bloomberg LP, the parent company of Bloomberg News. Coming up, President Joe Biden's campaign dismissed calls to quit following that disastrous debate performance last week. We'll take a look at the latest from the U.S. election with Ruchir, Sharma, founder of Breakout Capital. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. These are your top stories. Marine Le Pen's party dominates the first round of France's legislative election, but President Macron and his left-wing rivals move to keep the national rally from power. European stocks and the euro rally after the French vote on bets the far right will struggle to win an outright majority. Plus, Bloomberg also understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes, leaving the plane maker to choose between pleading guilty or going to trial. So key Democrats are rallying behind President Joe Biden's re-election bid despite his disastrous performance in the debate last week against Donald Trump. It's also a major week for European elections with voting in both the UK and France. Well, my next guest is keeping a close eye on politics and government spending on both sides of the Atlantic and how it's connected to Europe's faltering economic growth in the US in comparison to the US. Well, Ruchir Sharma is Chief Investment Officer and founder of Breakout Capital Partners, also author of What Went Wrong with Capitalism, I believe, out last month. So, Ruchir, thank you so much for joining us. Congratulations on the book. This is timely because I guess there's a misconception on what capitalism is and what it's actually become. You argue that instead of retreating, like many people think, government has been embedded more in policies, but in a different way.
Exactly. So the main point, like in the book, it's sort of a revisionist history, which is that I look at capitalism right from its origins to where we have come today and trace particularly the last 100 years. And this myth that the government has been in retreat and the neoliberal forces have been allowed to run rampage. I show in the book that at least when it comes to the, yes, we've had globalization, we have had declining in the power of unions in some places such as the United States, but generally the government has been on this march. And it's not just about government spending as a share of GDP. It's the suite of government habits, the bailout culture, the regulatory culture, the micromanagement of the business cycle. I think what you see here is an extensive involvement of the government, and it sort of solves for me what is the biggest paradox of our times, which is that despite these incredible technologies sprouting everywhere, and now with AI, why is productivity growth across the Western world been declining over the last 30 to 40 years? And what I argue in the book is that that paradox can be solved if you look at the role of government, that because the government has become bigger and more intrusive in people's lives, productivity growth as a result has suffered, and that is the key to economic growth.
Ruchir, I mean, if you look at governments in France, it's more intrusive than government in the UK, right? And so if you look at the economic template also, the US seems to be doing so much better growth-wise.
Yes.
Is that because of less government intervention?
Exactly. So, in fact, that's the op-ed in this morning's Financial Times that I've written, which is the fact that capitalism is in worse shape in Europe. So, the fact is that across the Western world, including like the United States, the government's role has expanded. But in Europe, it has expanded much more. One of the really surprising nuggets here, which I sort of discovered while researching this book, was that the role of government in Europe, in fact, used to be less than the United States until the 1980s. If you look at government spending as a share of GDP, in core European countries, it used to be less. After that, the role of government in Europe in particular has exploded. It's gone up everywhere, but in Europe it's gone up the most.
So are you basically saying that, government has to intervene less and we'll have more growth? Because it's very difficult. You had the idea of writing this book also in the pandemic where we saw unprecedented spending.
Yes.
But it was also to try and keep citizens safe.
Yes.
So how do you match up the two?
Right. But the whole issue is this, that I'm not saying that we return to the 19th century laissez-faire capitalism where there was no welfare state or anything. There is a role for the government. The government needs to facilitate many things. But I'm arguing that the state has become overburdened today. And this is not just about government spending. It's about the culture of bailouts, that should governments be bailing out private sector companies. Like as I argue in the book, that in countries like the United States, until the 1980s, it was considered heretical for the government to be intervening to bail out any private sector company. And now it's become commonplace, as we saw with the Silicon Valley Bank crisis last year, that now the bailouts have become preventive. So as I say in the book, that capitalism without bankruptcy is like Christianity without hell.
But Ruchir, is that because they're worried about, again, the common voter, right? Or is it because they're worried about the rich voter? And does that make a difference to your thinking?
No, I think that what we have to realize, and this is what like a document in the book, is that these interventions are predominantly helping the rich and the entrenched. Because when you have more regulation, when you have more interventions, you are keeping alive a lot of deadwood in the economy. And by keeping alive that deadwood, and also by having a lot of easy money policies, you're helping boost the wealth of the billionaires. Like the biggest increase that billionaire wealth took place in history was in that period after the pandemic. You had massive stimulus, and the biggest beneficiaries were the rich. So sure, risk has been socialized everywhere, and so you have a lot of people benefiting, but the rich in particular are benefiting. And now you can say that you're doing this to keeping people's welfare in mind, but if that was succeeding, why are so many people today so disgruntled?
I just wonder, I was going to ask you, if we link it back to the election, so you have UK elections on Thursday, you have the second round, of course, on Sunday, then in France. I mean, do politicians feel like they can't actually be that capitalist, even if they're on the right, because otherwise they get penalized? And is that because of the rise in populism and the idea that actually you need to take care of everyone?
I'm not sure in terms of that's the right reading of it, because what are people saying? The people are generally being anti-establishment. They're not saying that we are against, like some policies which are right or left so much. It's just an anti-establishment feeling. So I link that in the book. I argue in the book that if you look at the Western world today, most governments are losing elections, no matter from which political stripe they are. 10, 20, 30 years ago...
And this is why? Because people are fed up.
Yeah. Like, people feel that the system is not working for them, that the system is rigged against them. When they see bailouts, when they see the wealth explosion take place at the top, when they see property prices surge due to very easy money policies, that generally leads to a disaffection that the system is not working for us. In countries like US and UK, economic and social mobility today is at record lows, right? So people feel that there is not an equality of opportunity, which is what capitalism should be about. So if I go back to the fundamental tenets of capitalism, what is it? It should be pro-competition, it should be pro-churn. And I think that what we're seeing instead is that capitalism today has become pro-big business, and capitalism has become pro-the entrenched.
It's hard to argue that a lot of the money spent in the pandemic didn't go to also small businesses. And that actually, if that money was not spent, like, have you looked at the counterfactual? If governments did not support any businesses, like, would we have had a washout, and now would we be left with like a massive depression?
No. So in terms of the pandemic, I had two sort of points to make. One, that maybe the governments were emboldened to have these big lockdowns because they thought they could just spend their way out of it. Had they not had that thinking, maybe they would have been a bit more cautious about the kind of lockdowns that they had. That's point one. The second point is the indiscriminate nature of the spending then. Of course, we needed some spending to paper over it, but the big beneficiaries, again, ended up being whom? And here's the worst part, which is that long after the pandemic was over, the same easy money policies, and including some of the programs which were tailored for the pandemic, continued. Like in the United States, for example, I show in the book that in last year, government spending accounted for 1 percentage point of GDP growth. This is long after the pandemic is over. But that's the consequence of this, that once you put a program out there, once you start spending, it's very hard to put the genie back in the bottle.
Whose fault is this? Politicians thinking that they're omnipotent, central banks thinking the same, or is it really structurally
But
kind
as
of
I
like
say in the book
system?
again, that the road to hell is paved with good intentions, which is that the government's trying to be overprotective here, but instead it's backfiring because it is corroding the core nature of capitalism. And the worst part is this, that a lot of the elite economists, I think, are backing this without understanding what the consequences of these actions are. So what the book tries to do, as I said, is a revisionist history, that we look at the last 100 years, that what exactly works, what doesn't work. And there are hopeful signs too. I show in the book where capitalism is still working. And as you point out, that look at the difference between even US and Europe, that even though US itself has seen capitalism be distorted, in Europe it's happened a lot worse.
Yeah, sure. I guess, who's a great capitalist left? If you look even at the US, no one's talking about the debt. No one's talking about really even here in the UK, no one's really talking about fiscal. It seems that the parties are kind of in a lot of places, merging closer than they were in the past.
Yes, but I think that, what I show in the book is that this strategy is not working, which is that if it was working, then these governments and these leaders should be getting elected or re-elected, but they're not getting re-elected. I have a whole chapter in the book on where capitalism is still working. And my surprising candidate, I think, at the top is Switzerland, for example. I show that it is among the world's 20 largest economies, that here you have light touch regulation, government spending as a share of GDP is not that high, and yet most people are happy. It ranks among the happiest in the world on economic freedom and happiness.
I mean, they had that little thing with Credit Suisse, but we'll get you back to talk about that another time.
Yes.
Ruchir Sharma, Chief Investment Officer at Breakout Capital Partners, with a thinking book, a great book that is controversial or not, depending on how you read it, what went wrong with capitalism. Coming up, heading for a smooth landing, but pressures remain. We discuss with Agustin Carstens, the General Manager of the Bank for International Settlements. That's next, and this is Bloomberg.
Our bid has always been our offer, our proposal to Sabadell, first to merge and then the offer to the shareholders has always been extremely friendly. You may call it unsolicited. Yes, it's an unsolicited bid, but there is no hostility in making this approach. We are extending the offer to the shareholders, to the real owners of the shares. And in that respect, we believe that given the attractiveness of the offer, it's a good thing for the Sabadell shareholders to have this option to choose to tender their shares.
BBVA Chairman Carlos Torres there speaking to Criti about the firm's €10 billion hostile bid for Banco Sabadell. Now, central banks have done their jobs in the fight against inflation, and the global economy appears to be heading for a smooth landing. But pressures remain for policymakers and governments across the world. Well, that's the view of the Bank for International Settlements, which has just published its annual economic report. It warns that countries whose bloated fiscal positions are further stretched by higher interest rates should focus on stabilizing public finances. Well, let's discuss all of this with the BIS General Manager. He's Agustin Carstens, who's also former governor of the Bank of Mexico. Thank you so much, Mr. Carstens, as always, for joining us. You very clearly warned indebted countries are now, I guess, vulnerable to a precipitous loss of confidence, although this risk at the moment is largely being put to one side. Do you think governments will now heed your warning and actually prioritize fiscal repair?
Well, I hope that is the case. Again, I think that this is not the result of recent events, but this has been building up for quite some time, even some decades. Debt over GDP is at all-time high in the post-war era. Also, we are now in circumstances where a few years ago there was some form of relief because governments could say that interest rates was lower than the growth rate, and that helped not to go into an ever-increasing debt over GDP ratio. But it's very likely that interest rates will be higher than growth rates in the future. So that brings not a very positive dynamics. And on top of that, there are many other expenditures that might not be able to be postponed or eliminated, like the ones resulting from the demographic pressures, military spending, or, for example, health-related issues. And therefore, governments need to have buffers to react to these cases. Therefore, some form of consolidation, reprioritization would be good. And of course, that also would reduce inflationary pressures. And I think eventually that also would lead to lower interest rates.
Are you confident, Mr. Carstens, that inflation is subsiding? This is the biggest fight that central banks are doing right now, and it's kind of been quite a volatile journey.
Well, I think it has gone very, very well. I think that in our annual economic report, we do a review of what happened during the last year. I am very positively surprised where we are today. The scenario that we are facing today was not very likely at the end of where a year ago, and I think it has been achieved in a relatively smooth way. I think that this will continue. Now, always we have to be on the guard on surprises. There might be a few, but I think that the central banks are in the good set of mind to address any surprises and tackle problems in time.
Mr. Carstens, the BIS has been studying potential dangers from the rise of shadow banking. We've also seen a huge growth, actually, in private credit in particular. Do you worry about this race to the bottom?
Well, yes. I mean, definitely we worry about it. I mean, especially in an environment where interest rates might be higher for long. I mean, one very positive aspect of the path towards disinflation has been not only that GDP has been sustained, but also that we have gotten to this stage without many tensions on the financial stability front. Last year we had some banking issues in both sides of the Atlantic, but today we really haven't seen much problems. Now there are some issues or features in the financial markets that probably has postponed the impact of the rise on interest rates, for example, fixed rates, longer maturities, and so on and so forth. These can change and will be changing in the near future, and that can bring some pressures. And one of the sectors where this can show up is precisely in the ones you just mentioned.
So private equity seems to also be going through a pretty tough times in terms of valuations, in terms of disposals and higher borrowing costs. Could that have implications for the wider financial system?
Well, the exposures of the banking system to private credit and so on is limited, is well identified. I think that in a way that limits the systematicity of any potential issue.
How worried are you about commercial real estate?
Enough to pay attention to it, but not enough to make me lose sleep at night.
I mean, if you look, is it really the deficits then that make you lose sleep? If we're looking at governments trying to stabilize finances, I don't know whether I think you had a target of 1% of GDP deficit. It should be the new target instead of 1.6 last year.
Well, I mean, each country is different, no? But I mean, one thing we have to keep in mind is that to change the fiscal stance of a country and to achieve, let's say, longer-term targets, for example, in terms of the to GDP, it's like moving the Titanic. So I think that the sooner the government starts realizing that today's environment is not sustainable in the long term is important. For me, I think that the lack of discussion, the lack of awareness in some capitals that this is a problem is for me the main issue. We have to start acting now, because then, you know, you can reach a situation where you really are in a vulnerable situation, and then minor things can trigger a run in the markets or dysfunction in the markets, and you don't want to be in that stage. Now, it's not very easy to see where you are with respect to that trigger point. But so the sooner you take action, the lower will be the possibility that you will find yourself in a very undesirable situation.
Agustin Carstens, thank you so much, as always, for joining us. That was the General Manager of the Bank for International Settlements. Now, coming up, Bloomberg understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes. We have the details next, and this is Bloomberg. Now, Bloomberg understands that the U.S. Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes, leaving the plane maker to choose between pleading guilty or going to trial. We're told that the DOJ will also fine Boeing more than $240 million and order 3 years of corporate monitoring. Now, the lawyer for the crash victims' family says it's a sweetheart deal for the company. Well, let's bring in Bloomberg's editor for global aviation. He's Benny Kamel. Benny, thank you for joining us. So Boeing and the DOJ actually declined to comment. How significant would a guilty plea be, and what really are the wider ramifications of this?
Well, it's really bad news for Boeing. They'd hoped that they would get less of a slap than what appears to be the case. It's not official yet, but according to people familiar and also according to lawyers representing the victim families, this is what's going down. Boeing has a couple of days until the end of the week to respond. We just saw in that clip there Dave Calhoun, the CEO of Boeing. He was speaking at a Senate hearing earlier this month. And at the back of that room that we just saw, that we're seeing here now, there were the victim families demanding accountability. So they're getting a little bit of that now, but obviously not to the tune of what they wanted. For Boeing now, the options are, do we plead guilty, or do we take the riskier path potentially and go to trial? Pleading guilty might sort of be the easier way out, as it were. It sort of caps the problem. But you've got to remember, this is a company that has government contracts, so that might put them into a penalty box there. But then on the other hand, as I said, going to trial will leave them with a sort of a legal overhang for years to come, and that also can't be very appetizing.
Benny, the plane maker is under huge scrutiny, but it's also pushing ahead with the deals for Spirit Aero. Is that coming into play at all?
Yeah, I mean, it's a separate but somewhat connected announcement. That came out hours after yesterday's DOJ announcement. So early this morning, Boeing said that they would buy back the bulk of Spirit Aerosystem. That's a contractor that they spun off about 2 decades ago. But in the wake of this crisis that we've been writing so much about since the start of January, they decided that they had to take this business back in-house to gain greater control of it. It's inherently a sort of value-destructive deal because they're buying back something that they had wanted to split off. They have to spend quite heavily on it to turn it around. They're buying for the asset in stock and not in cash because Boeing doesn't have the cash right now to do this. Interestingly, there's a little side deal on this. Airbus is also features in this, obviously the arch rival Airbus. Spirit makes parts for Airbus as well. So that was what made the deal quite complicated because they had to sort of divvy up the different assets. Airbus will get some of them, Boeing will get the bulk. An interesting element in this, that Airbus actually gets money to take these assets off Spirit. So that's good news for Airbus and bad news for Boeing.
Interesting, so interesting. Benny, thank you so much. Bloomberg's Benedict Kamel. Now, a prospect of French political gridlock actually sent European markets higher today. Investors bidding up the euro and pushing the CAC 40 to the biggest gain since 2022. Up next, Bloomberg Brief with Daniel Manis.